Welcome to Markets Now. I'm Michelle Rourke with Mark Schultz of North Star Commodity, and we're seeing a lot of green on the board in both grain and livestock futures trade today. And despite the fact that we have seen the trade war escalate with China, even today, Mark, the markets, commodities sector has been handling it quite well.
I think it's been handling it extremely well in light of what we've been seeing on the trade, and of course, it changes all the time, almost by the minute on talks that are going. So the market's very sensitive what's going on. But I think in the big picture, the stock market had a big reversal day on Wednesday, set back yesterday, bouncing on both sides here so far this morning, up or down. But if we finish it a little bit stronger here today, I think would be a good sign. U.S. dollar index has also been one that's been dropping significantly, and that's getting down below a level here of 99.50. If we start closing twice below that, I think you're going to see the dollar index go down to 92 to 94. A lower dollar certainly will help us out on the export business as well.
So the market, we could have higher weekly closes, as you point out. So is the market factored in the most negative or bearish news, or is the market perceiving we're going to get trade deals?
I would say it's probably perceiving that the worst is in, and I think that there will be trade deals that will be done that will be beneficial for us in the export arena. Now, we're still going to have the big battle with China, and I think in the big scope of things, China probably going to try to do more business with Brazil. They'll just buy more product there. The Brazilian prices go on up. It makes our products look cheaper, and therefore we're going to see more business. So instead of seeing more business from China, we're going to see more business from other countries, is what I believe will eventually start to happen in here. So that, and then of course you have the weather coming up, and that's of course the next 30, 40 days will start being an important time period to see if we can get the crop planted in a timely fashion, and what happens with the crop down in South America, which for right now looks like it's in pretty good shape.
Yeah, it does. We've heard this week China's been buying Brazilian beans, maybe over 40 cargoes. Brazilian basis has actually been very strong. That's been kind of pulling our basis up as well, or at least our prices, you think, in soybeans?
I do. I think bean prices quoted somewhere between 60 to 80 cents a bushel higher in Brazil than they are in U.S. So I think you're going to see some business coming back to the U.S. I would still say our demand, quite frankly, has still been very good across the board. Corn, beans, not so much on wheat, but the corn and bean demand has been pretty good. And of course, the grain stock or supply demand report that was out on Thursday, still showing that we've got the corn carryout going down and dropped further than everybody was expecting, down to 1.465. The beans going down 375 carryout versus what most of us, and myself included, thought we'd be somewhere between 390 to maybe even 400 million bushel bean carryout. So some friendly news coming out of that, and we'll see that coupled with some business, and you're seeing the basis starting to firm up, corn and beans both. That's probably about normal, because I think that'll even get a little bit tighter as the farmer goes to the field, starting probably not only this week, but for sure next week. Looks like he's going to be going to the field. I think you'll see the basis continue to narrow.
Yeah. And not to beat the China horse to death here, but if the rest of the world starts buying our product here and we get better trade deals, obviously that's supportive. But if we keep this tit for tat going with China, it just keeps enforcing or reinforcing that relationship that they have with South America, doesn't it?
It does. And that's what happened to us in 2018 when we started this trade war with China. And we thought we had something close to an agreement real early in the trade. And then, of course, we backed away from that. And then it went on for 2 years. But in the meantime, China just went over to Brazil, signed up some more contracts there to buy more grain. Brazil then brought in more land and production. So we went from, what was it, 88 million acres of beans in Brazil in 2018 to now 117 million acres of beans in Brazil. That's how much land they brought into production. And I would not be surprised to see more of that happen again here in the coming years.
All right. So with the positive action that we've seen, especially in corn, and now with the ending stocks number from yesterday, as you mentioned, down to 1.465 billion bushels, do you think May corn or July corn, are we going to get over the $5 level again?
I think you got a shot at going over the $5 level. And what you'd have to do on that, and watch 505. If we start clearing that, uh, then you could see a market on the technical side. You should start another leg up, and that would suggest something that moves up to 575, and I wouldn't rule out $6. There's a gap at $6 on the charts, on the continuation chart. You may go back to that. Mother Nature is going to be the key here. I think we're going to get in early planting. Obviously, we got some drowned out areas in the eastern Corn Belt, Ohio River Valley, and the Delta. I looked up acreage on that. It's about 7 million acres of corn that could be involved, but not all of it is going to be so wet that it can't get planted. More of it just be river bottom ground, things like this that might be delayed. But overall, I think the fact that you go in early probably still suggests you're going to have more acres, corn and beans, going in the ground than what was previously anticipated.
Yeah, I agree. Weather's going to be a key here. Do we have weather premium in the markets, either corn or even wheat at this point? And do we need to put more in?
I don't think you have much premium in at all in the grain complex in here on any of them at this point. I think most people assume that we've got a pretty good crop coming out of Brazil on the Soybean corn. It's at a critical time period. It needs the rain and it keeps getting the moisture that it needs. I wouldn't say abundant, but just enough to keep getting by at the present time. Uh, but that'll still be critical. You'd have to have something that would change right where it go hot and dry in another 5 to 10, maybe 10 days. And then you got to go for a 10 to 15, 20-day stretch of hot, dry weather to start doing some damage to the crop down there. In the U.S., I would say the only one, the East is a little bit on the wet. It's definitely on the wet side. The Western Corn Belt, especially the western areas, the Dakotas down into Nebraska, parts of Western Iowa, Western Minnesota, pretty dry there as well. Not a problem at this time. In fact, I would view that as being slightly bearish. But in 20, 30 days, if you don't have some moisture turning around, it will start having an impact.
Yeah. Just quick, we talked about corn getting over $5. Soybeans are getting above some chart resistance and moving averages here. How far do they go, do you think?
On the beans, watch the 1035 on the nearby May. If we clear that, I think it would open up the door to go up towards 1075 to 1080. If you got a little bit more of a weather problem, wouldn't rule out something that could move up to 11 and a quarter, something like that. But you're going to have weather is going to have to get a lot worse than what it is right now.
Right. All right. The livestock are holding together as well, very well, with the China news and the tariffs announced again this morning. But if you look at it, China, this tariff situation is essentially going to shut off business, isn't it?
It is. Even when they moved it up to 85%, I couldn't see where there would be much buying of any pork or beef. And the Chinese purchased roughly about 40 million pounds of pork into of U.S. pork into the country. Also, do about 40 million pounds of beef per month into the from the U.S. coming into China. That will right now, if it stays like this for an extended period of time, for 30 days, 40, you'll shut that right down to zero. There's no way I could see anybody buying any of the product coming in. So we're going to lose that business. We probably, hopefully, pick it up someplace else in here. In the meantime, as far as the beef is concerned, you still have 10% tariff across the board on all countries. So including Brazil and Australia, who we import a lot of beef from their countries into our country, and that may slow that down. So net result is we might be more neutral to a little friendly with the beef, a little bit more on the negative side for the pork as far as export business.
Yeah. Do you think cattle and hogs are also trading with the idea that we are going to see some deals, or is the fact that maybe the stock market is quit bleeding helping those markets more?
Well, the dollar coming down, well, if it continues its decline, will certainly help us in the pork and the beef exports from other countries. That will be a big plus for us. And it will also, if it comes down, will also slow down us importing more product coming into this country. Any way you cut it here, we're still going to be a very tight supply of red meat in the U.S. at this point. So in essence, if the stock market were to bounce back and start getting some more strength, my guess is your domestic consumption here in the U.S. will stay every bit as strong as it has been, and therefore we will still be incredibly tight supplies for the rest of this calendar year in both pork and in beef.
But the funds have been liquidating here in the cattle because of these stock market ebbs and flows, haven't they?
Oh yeah, they were on net long, what, 139,000 contracts coming into this for last week. So yeah, they got taken to the whipping post without a doubt. Cattle futures dropped dramatically, but it's the cash market I think is the one you got to watch closely here. Cash is right now is still trading 204 in the south, 207, 209 in the north. Futures are down in the low twos to upper one mid 190s. So you're still trading futures on the cattle at a pretty good discount. So watch your cash. Next week is Easter. Probably gets to be a slow week there. So I don't know that it jumps that much. But hopefully after that, if once we get past Easter and if we're still able to pull this stock market higher, then I would still think the demand will get pretty good.
Yeah, and cash and cutouts have both started to fall here in both the hogs and the cattle, but yet I've been impressed with how well those markets have held together. We hate to beat that one to death, but
Yeah, the pork cutout has fallen and probably a little bit more surprising to the downside than I was expecting. We are going to enter the right time of the year here now. Next week, this week, and next week is probably one of the better times that you see the seasons where the pork cutout tries to move higher. We will need that. If it does not, then it's going to be difficult for the hog futures to go much more to the upside. They would have to be doing it all in anticipation of more business coming in. Uh, so in the cattle, once you get past Easter, once you get past the first middle of May time period, usually your spring demand is pretty much bought up, and that usually becomes about the end of the line there for the cattle.
yeah, you bet. We got the best demand ahead for beef for sure. All right, thanks so much, Mark Schultz with North Star Commodity. That is Markets Now.